First, check if the price drops below the 50 EMA. That's our red line. This indicates that sellers are gaining control and the market is likely heading downward. Step 2, at the same time, glance at the MACD indicator. We want the MACD blue line to cross below the 0 level. This confirms bearish momentum and strengthens our conviction to go short. When both conditions are met, price below the 50 EMA and MACD blue line below 0, that's our signal to enter a sell position. Place it just above the candle that touches the 20A green line, or use the most recent swing high for a slightly more conservative stop, depending on your risk appetite. Once you've entered the trade, here's how to manage it. Stay in the trade as long as the bearish momentum continues. That means the MACD blue line remains below the 0 level and the price stays below the 50 EMA red line. But when the MACD blue line crosses back above 0 and price breaks back above the 50 EMA at the same time, it's time to exit the trade. The downtrend might be losing steam. Go for a 1-to-2 risk-to-reward ratio, which means your potential reward is twice the amount you risked. Or if you prefer to ride the trend, use the 20 EMA as a trailing stop. This way you can lock in profits as the price continues to move in your favor. The price is consistently moving below the 50 EMA, which is our red line, a classic sign of bearish pressure. And at the same time, the MACD blue line is trending below the 0 level, which confirms that the momentum is also bearish. So what did I do next? I waited patiently for a pullback. That is, for the price to move back up toward the 20 EMA, the green line. Then I looked for a bearish rejection near that 20 EMA, a sign that the pullback is losing steam and sellers are stepping back in. That's exactly what happened, and that's where I took my short position. Even though I missed the first opportunity, this pullback entry gave me a second chance to jump into the trade with a solid setup. Now, once you've entered the trade, here's the important part. You need to stay in the trade until the MACD blue line crosses above the 0 level. That's our exit signal based on momentum shift. Until then, let the trade play out and give it room to work. For this particular trade, my personal goal is to take a profit of at least $1,000. You should always have a clear idea of how much profit you want to take from the market. It's not just a random entry and exit system. It combines trend direction using EMAs, so you know the overall market bias, and momentum using MACD, so you know the strength behind the move. This combo helps you filter out fake outs, reduce emotional exits, and stay in the trade for the bigger move with much higher accuracy. As I mentioned earlier, the 50 EMA, that's our red line, acts as a powerful dynamic support or resistance level, depending on how the price is behaving. It's not just a static line, it moves with the market and gives us real-time insight into trend direction and strength. In this trade, we saw a perfect example of that. The price made a pullback right to the 50 EMA and gave us a clear bearish rejection, a strong sign that sellers were still in control. That gave me the confidence to hold the position even as the market fluctuated.